we're talking about startups. We're going to look at the, yes, economic downturn and the challenges, but we don't want to only focus on that. Because you'll hear from the panelists today that in crises, there's also opportunity. So today I have with me Jamil Abuwarda, Karima, I'm not going to make the mistake, Shadi and Mohammed from Global Ventures. And it's a really exciting panel because we have an angel investor or money meets media. We have plug and play, VC, early stage. Mr. Shadi, I called him a veteran startup and principal of a VC. So it doesn't get more exciting than this, ladies and gents. So let's get started. Jamil, I'd like to start with you. So for the startups in this room and people who want to know about whether it's a good time to start up or when to start up, as an angel investor, what do you look for in startups to invest? And is there such a thing as the right time or not the right time?
Great question. I'd first love to ask the room, how many people here have been through the 2008 recession while working? Okay, half the room. So as startups, you have to actually plan for something which is when people stop spending money, right? So I've been through at least 2 recessions. And what happens is people think it's not going to affect them. So the mindset has to do with what can I do to actually keep on selling, right? So just a bit of a background. So I've got a media background, but it's media then technology because I realized all the media that I was making was for technology companies. And with these technology companies, you know, I started to think, how can I make my money make money? And that's where investing comes in. You can buy a house, a piece of land, but then it was really self-education as in, what else can I do? And one of the things is investing in companies. And I'll give 3 very quick examples of investments that I've made, but I'm hoping that the people here will understand from a startup perspective what it means for an investor. So a guy I knew did MIT, very high-flying banker on Wall Street, a lot of money, and left it to create, and this is in London, a financial solution company. And he took on investments. So let's say I invested $1,000. It was more, but $1,000 in that. Another investment was through a person that I trust, and he's a VC, and he said this great company in Austria are doing something in medicine, and it was run by a doctor. And the third one is again within medical care, but it's in the USA, and they started just before COVID, and they just made it easy for people to find a doctor on a phone, right? And it was an app, and you can ask a doctor to save money instead of going. These 3 investments, the first one went bust because the partner, so I'm saying that he knew bankers and he had a couple of $1 million easy were invested in his company, but he went bust because the partner after 2 years decided he doesn't want to do it anymore and owned 50% of the company. And this is one lesson that I'm making, which is you're investing in people. So I invested in my friend, who's a high-flying banker, who's MIT and all this.
He would have worked if he was a lawyer.
You know, yeah, he needed lawyers. And he talked to all the lawyers in the world, and they couldn't break that contract of the partner, literally, tannah bil-Masri, and said, no, I want 50% of the company, and I'm not going to do anything. And no investors would invest in a company when 50% is owned by somebody sitting at home. He goes, I earned it, I've done all the hard work. Now, second company, a doctor. This doctor isn't really great at running a company, so it's not really made any money, okay? The third one is a company where you call a doctor and they opened just before COVID. And this wasn't a plan, but they're worth 5 times as much. So if you put 1,000, 1,000, 1,000, the third 1,000 is now worth 5,000. And the point is, if you're going to invest in something, number one, it's about people. Who are you investing in as the owners, and how much do you know about them, the founders? And the second part is you have to have an appetite for failure. Like if you know that what you're putting, and this is you as a startup founder, the people putting money in you actually think you can go to zero, right? And they're just, the people who are more used to it, and I'm sure the panel will have a lot more insight, will actually do better due diligence. And that's where really, you know, you need good lawyers. But that's 3 examples from my experience.
Fantastic. So the key takeaway for you is you invest in founders, you invest in people, and you invest in something that's going to make you a lot of money. But yeah, so you invest, your focus is, as an angel investor, founders. I want to take it over to Karima. Karima, you're from Plug and Play, it's a VC, but you focus on early stage. Can you tell us what you look for in the startups and what you actually do to support them? Because I think that would benefit everybody here.
Thank you, Soraya, for this. Well, first, thank you for the great question, and I can't agree more as that founders and the people behind the startup are usually the key factor that excites VCs because you can pivot the product, you can pivot the team, but the founders, they generally remain with their vision, and that's key. However, one of the things that we try to understand better is also self-awareness as a VC and as an open innovation platform. How can we support these founders? So, of course, the due diligence is there. We do basic early stage due diligence at the end of the day. However, being self-aware of how can we support, for example, using our network of corporate partners, how we are spread out regionally as well. So Plug and Play has global presence. However, for example, if we did not have any presence in a specific region, we would refrain from really looking into it as a direct investment without anything, just because we have more to do and more exposure on other countries. One of the things we also try to leverage as an investor, an early stage investor, is our global presence with our regional and large operations with accelerator programs. So alongside most of our activities, we have 48 offices globally where we run more than 60 accelerator programs yearly. So this also allows us to bring our portfolio companies and soft land them into new geographies. And the key is also that our accelerator programs don't take any equity. That said, we can bring our portfolio anywhere we have presence, and we can introduce them to our big network of corporates. So being self-aware of the sector, of who can we introduce our portfolio to, as well as our exposure regionally and globally. This is also a factor where we can consider smart investing from our side. So self-awareness of the VC's resources and capabilities can come alongside the proper due diligence and the founder attractiveness.
So just a quick note on what you were saying for the benefit of the audience. Are you sector agnostic, or is there a specific sector that you focus on?
So we are sector agnostic. However, specifically when we're investing in Egypt, for example, we have a lot of resources that can allow fintech founders to thrive faster, and logistics and smart cities verticals, because we have an accelerator program focusing on this. So even if you're a portfolio company, you still get access to the accelerator resources, given that this is a zero equity game for us.
Perfect, thank you. What I'm going to do, I'm going to save the best to last, Mr. Shadi. I'm going to go to Global Ventures. I want to just create a comparison here. So Plug and Play is a VC, early stage. Global Ventures, a growth stage. Tell us a little bit about what you do as a principal of Global Ventures, what you look for particularly in startups. Who should approach you as a VC? At what stage, and what do they need to pitch to you?
Sure, definitely. Well, thank you for having me. Pleasure to be here with you all. So Global Ventures, we are a VC firm, a regional VC firm based out of Dubai, but with a lot of local presence in Egypt, Nigeria, Saudi, and other places. We invest in Middle East and Africa, but we also have 20% allocation towards global companies. So we have portfolio in the US, we also have portfolio in the UK. So we typically invest in Series A and Series B companies, but sometimes we can do this stretch up to Series C. It really depends. And we typically look for a lot of different factors. So just to, we are sector agnostic. We invest all across different verticals and sectors. Sometimes it would change along the way, but really depends on the market conditions, depends on the portfolio construction, the current portfolio that we have, and a lot of different things. But we are very open actually to any startup with any idea across different verticals.
I have a question here.
Sure.
Because I love VCs very, very much. And I love when they say we invest in everybody, but the reality is you don't.
That's not true. Huh?
Exactly.
This is how it starts, Mohammed.
Exactly, right? Yeah. So let's be very real. If we've got a great idea, but we come to you as a VC, how are you going to strategically look at us, and how are you going to, what's the criteria that we need to check? So you just said you invest in everybody, but you don't, right?
Sure.
So
That's
tell
a very
us
good
more.
question.
Let's be very specific.
Let's break it actually into 2 points. So
Okay.
when we say we are sector agnostic, that means that we are open for everyone, right? But then when we make an investment decision, it's not only about the company, and this is something very important to understand. I would say that 95% of the time when we pass on a business model, it's not because of the business, but because of a lot of other different factors that we have to take into consideration.
Such as?
Like our portfolio construction strategy, our current exposure into a different sector, and another. If I'm overexposed to fintech or e-commerce or food tech or others, so it doesn't make sense to increase my exposure, but to diversify my exposure into different sectors that we see lucrative. Also, it can go to the level of detail between B2C and B2B business models. So at one part, I cannot, like for now, like I already have 2 B2C business models doing e-commerce. I wouldn't add the third, but I can add a third as a B2B e-commerce. So a lot of different factors that come into the equation, as well the macroeconomic condition, a number of transactions taken in, a lot of different things. And so that's why I wanted to break it down into 2 steps. The first step, when we say we are sector agnostic, that means that we are open for everyone. And the difference between us and between sector-focused VC funds is when you say, like, I'm a sector-focused of fintech investor, that means that anything that would come different from fintech, it's an automatic pass without even looking at it. But we are open, so we look at it. Then the investment decision, it's a totally different story. So, and we cannot make,
Which is the key part.
we wish to invest in everything, but sometimes we have to make the hard decision, right?
Yeah,
So we are in the business of money, but like making money and growing and helping a portfolio company, startups generally to grow. What we are looking for, I would say, and cut it short into 4 main things. Definitely team and building up, and I think it's the kind of an incremental process, starting by angel investors into early stage VC, coming to, I would call us like kind of late stage VC at one point. So team definitely for us is very important, the resilience of the team and how they showed some sort of resilience, vision. Are they mission driven or not? This is very important kind of criteria for us to look at. Second thing would be looking for market. Market is TAM. What's your TAM? What's your market? How the market looks like? What's the macro conditions in the market? How things are structured? And it's really important to have this kind of sizable piece of the market.
Can I just stop you there?
Sure.
Because I really want to go to Mr. Shadi at this point. Because Mr. Shadi and I had a discussion about this point earlier. We were talking about the market, we were talking about timing. And the reality is we've heard a lot today, or even over the past 2 days, about the economic downturn. I mean, I'm not sure if you were in the room earlier, but we heard from one of the startups talking about, next 2 years is going to be doom and gloom. Mr. Shadi, what's your opinion on that? So you're a seasoned veteran, I keep saying startup. What's your opinion? Tell us about your thoughts on that topic.
So I'm here like a bit of everything. I used to be a startup. I have like 6, 7 startups. I started 16 years ago. And now some of them are scaled up to a lot of countries outside of Egypt. And now it's all under one holding. And this, in the meantime, when the success happened, I started to be like a sort of, not a VC, but as an investor, is that I merge and acquire a lot of
please don't say you're a VC. We have enough of those on the panel.
I love startups. I love startups. I'm here to present the startups and trying to help them. Yeah. Yes, for the situation and the current economical situation around the globe, for sure the spending will be a bit reduced. However, we will go back to basics. We cannot. For me, if I'm putting myself in the shoe of the venture capital or the investor, I will not do it for the evaluation over the coming 5, 6 years. I'm going on the bottom lines, and I have to see now what's happening, at least for the coming 5 years. We will go to basics that will not go to the cosmetics investment and cosmetic ideas to invest in. Like I will go to like supply chain in pharmaceutical, medical, supply chain in food. I will do systems interpreting this kind of industries that we cannot call it cosmetics. It's the mandatory we cannot slow. Mm-hmm. Those kind of investment I will be aiming to do. As for the countries, you told me in our discussion what kind of business line you think it's better. I told you it depends on the region. What fits in the new startups here in Egypt cannot fit in the UAE and cannot fit in Saudi Arabia and cannot fit definitely in the UK or in the US. Every country has its own direction, its own motivation, and own level of technology and own level of being ready to accept whatever idea I do. So that's why I'm telling you, there is a lot of ideas everywhere, and at those time of crisis, it's really the times that we make money. And the venture capital know this, and the startup know this. However, it's a good opportunity also for all the startups to start focusing on their operation and start to focusing instead of always focusing on collecting money and raising funds. Now they had to reduce their OPEX, they have to sustain, they have to last longer. So when any VCs come to evaluate any of those startups, they find a solid product, not an idea. They find a prototype that they could invest in. So yes, now it's both opportunity to improve themselves, to be more ready, and taking the shoe of the startups. Raising funds in the beginning is not good for the startups and for the evaluations that they will have upon the success after this.
So you would tell them to hold steady, and you would tell them
to try to hold steady, and then our friends here will acquire them one day, inshallah.
Yeah. Well, the late stage and the early stages. Yeah. So let me come back to Karima then. Karima, do you agree with everything that Mr. Shadi has said in terms of, whether there's no particular industry right now? It's really different countries will have different industries. Some are, further ahead than others. And it really is, if you've got something unique and you need to back it, you need to look at operations. I mean, what's your advice to the startups in the room, and particularly because you work with a lot of the early stage ones?
Absolutely. And well, first, I definitely agree with everything you said, just to kick it off. And the second thing I would double down on is also how you said that there are specific industries that work somewhere and not other places. I would add on to this the gaps that you see in the market itself. So sometimes it's not a matter of industry, it's a matter of adoption, it's a matter of regulatory issue, so that money, for example, is not able to move from one place to another very quickly and very cheap, the way it does in different areas. This is where, for example, companies can come and do some challenger moves against the local infrastructure of the fintech sector or the finance or banking. So it's really about identifying the gap. So definitely, and maybe now less than before. So now we have a more of a global economy. People are moving. It's easy, but you would need to still identify the developed quote mature markets versus the emerging markets where you have big populations, a lot of gaps to fill, and a lot of adoption and young population that will move much closer. So a bit more focusing on the demographic and the macroeconomic landscape as much, not necessarily from a sectorial side, but more on the general landscape macro-wise.
Okay, so far we've been very general. We've been all sector agnostic. Nobody's
very
saying that they're going to put their money in on bets on anything. You hear that? Everyone's very general. So I want to take the conversation. Let's make it a little bit more specific, because I have Mr. Money and Media here, who is in the crypto game, or at least dabbled in it and advised some people. So let's talk a little bit about that space and what's been happening, and maybe startups here who are in that space. What's your advice to them? What can they do if they are in that space? How do they develop their idea, or should they stop now? Or what's happening in that regard?
So the first thing is, I'll give you the conclusion, which is anything that is called crypto and all of that, at the end of the day, is exactly people creating businesses. So anything that's magic money and made of unicorns and puppies is bullshit. It's actually somebody behind a computer doing that. So it's the same basic thing. That's a conclusion. But how did I get here? With a media background, I, again, worked with technology companies. For the 5 years before COVID, I was in China, India, working for a big brand, and actually launching new products, technology products. So I'd go to all these amazing tech shows, and we'd get products and launch them in new markets, some in the Middle East, some in Europe. And the thing that I'd look at are literally people, and this is amazing. So a startup, I just want to kind of split it in two. A lot of people think startups are the next Facebook, the next Uber, and it's a lot of tech, and I think even this conference has a lot of that. But startups, some of the ones I worked with, they put stuff together in a factory in, for example, India, technology. They make it themselves, and it's been a family business for about 50 years. So they made radios, washing machines, and TVs. And this is a company that's been around for 50 years, but it's still considered a small business relative to these unicorns. But, and this is my due diligence, I had to work with these as part of the brand before we take them to the new market. They made $10 million a year profit, right? So this is not a bad business to be in. Can they scale? They didn't really care. They just wanted to enter a new market. So the point being, doing business, so my first point is, doing business, you might, if you're selling and selling well and you have good margins, it's not always necessary to become a $100 million business and to do scale and to look for money. And that's where better VCs will tell a company like, you're doing well and this isn't for you, especially when they dream of scaling internationally. I think you just mentioned what's good for Egypt isn't good for Saudi. So it's okay. Egypt, make your 1 million Egyptian pounds. So this is something, again, I'm somebody who, and where my media background again comes into play is I'm good at marketing. So I'll be like, that's a good market, bad market. But, you know, having been around for a while, I know what a good business plan looks like. Now to crypto. And that's why I'm relating it exactly to crypto. I went into crypto 5 years ago because it's a payment solution that is still theoretical, right? It still doesn't work because we have to, it is not an alternative to banking, it is an addition. There are half of the people, grown-ups in the world, don't have bank accounts. So they can, through this new technology and a mobile phone, send money and receive money without a bank. That, for me, that's the interesting part, and I've been looking at it and then started giving workshops to CEOs and all the way down to a nephew or a niece, saying this is what it looks like. And that's where Forbes came in, and I was doing some videos, and I've done some videos with Forbes, but the message I think is consistent, which is, it is an amazing new technology, and it is still at the beginning, so I'll apply what I mentioned right at the beginning. Who's behind this business, and where is the smart money going? And to be very clear, the smart money is making the biggest mistakes right now in crypto. But the biggest lesson, and I think Global Ventures, you mentioned it, you look at many different sectors and you diversify. And I think if you're going to look at crypto, don't put all your money in one place. Put 1 month's wage if you're going to bet something, because you can make it back in a month. That's it for now. And that's my biggest advice in that area.
Thank you so much. And Mr. MC, have I got, like, can I ask them for 2 final words of advice? I've got Mr. Shadi and Mr. Burning to give us their last words of advice. Okay. Mr. Shadi, I'll start with you, and then and then to Mohammed, and then we'll open the floor to questions. So, Mr. Shadi, what's your advice to the startups who are just either embarking on their journey, or even ones who are, you know, already in the mid stages but want to aspire to really shoot for the stars? What's your advice?
Before I say the advice, just one main thing that I would like to highlight about their age in such a timing for the economical situation. The small companies and the startups are more agile to follow the dynamics happening around. Companies like ours, when you reach thousands of employees, it's very hard to take a decision to maneuver. Startups always have the ability to cope with whatever changes happening in the market, even in the region. That's a big advantage that gives them real edge and advantage to sell against.
So they're not big dinosaurs, too hard to move.
A lot of big elephants cannot move that fast, and they have the chance now, while we cannot move, to grow tremendously, and it's a fabulous opportunity for them. And every sector now having a part, or one of the tycoons that handling the operation, let's say in Egypt, one of them are not capable to maneuver, and those small companies still could grab a market share out of it. And that's what's happening in all the recessions usually, or all the pandemics, that you will find small companies starting grabbing market share from the big names. And that's a real opportunity for them. As for the rest of the startups, the advice that I would like to say is that 42% of the success of any startups depending on the timing that they launch their products, and when and where. So it's not only about the idea or the system and the implementation, or about the funding. The funding is the easiest thing happening now. However, the timing to choose, like if someone would like to start a business that depends on... I love
the point you just made. I'm going to stick on it. Funding is the easiest thing right now. I don't know how true that is.
Especially right now.
I don't know how true that is, but let me bring Mohammed in at this point. Mohammed, how true is that statement by Mr. Shadi? Come on, I need a debate here. Let's go. These people want a debate. No. Last words of advice to the audience. What would you tell them?
So I mean, like we can speak for 3 hours about like.
You've only got 2 minutes.
Right? Yeah,
Clock starts now.
So, but I'll just try to keep it short, and maybe it's just a continuation of what I was saying before. And I think try to build a self-sustaining smart business models. And this is something that we have been commonly seeing in the market, that a lot of the business models coming across is not self-sustaining. It's not enough to carry off the business forward is not enough to carry the business to profitability. And when I talk about profitability, I'm talking about bottom line profitability. Like top line profitability is kind of easier, kind of state to achieve, but if the business model itself is not self-sustaining, then it's going to be hard. And one example on that, like we see a lot of startups where they make like let's say it's a marketplace connecting point A to point B, and you're making about like 5% commission on that transaction. 5% is not enough to carry the business model forward and take this business to profitability. So usually what happens is they come across with what they call value-added services or ancillary services. And ancillary services would be financing, embedded financing, selling some sort of products, 1, 2, 3, 4, whatever. So it can take up their margins, or it can take up their take rate up to 20 and 30%. And one of the biggest issues here that we find a lot of disconnection between the transaction itself, which is the 5%, which is transferring something from point A to point B, and between the value-added services, where basically it means that after you acquired, like let's say 100 users that did this transaction between point A and point B, you need to reacquire and reconvert them again to buy the value-added services. Yet, when we say value-added services, we expect something to be tied directly to the transaction. So something like, okay, you're going to buy this, where I'm going to make 5% on the transaction, but then I can offer you an immediate financing on it, where I can increase my margin up to 1, 2, 3, 4. So smart, self-sustaining business models is really important and contributes a lot to product stickiness, I would say. And
I love the VC's message. It's always about the bottom line. But in fairness, this is what it's about, right? If you want to build a successful companies behind the cause always are about making money. I mean, this is how they survive. You need money, you need cash flow, you need to grow, you need to develop, you need to hire staff, you need to expand, and that's just part of growth. So I know I had a dig there, but it was just a cheap shot. Okay, but I think their message is very, very clear. I don't need to summarize any of what they've said today. I think we need to open to questions, so I hand it over to the MC.
Anybody have a question?
Can I ask a quick question? So what businesses do you think in the next 2 years are going to survive the recession?
I was looking for someone who was asking.
Well, crypto is
here. Sorry, could you please repeat again?
Quick, literally, like the top 2 kinds of businesses that might survive the next 2 years in terms of they'll still sell.
Sorry?
They will still sell products.
No, I mean, every business got a chance to survive actually over the coming years. It really depends on how you structure your operations, how you structure your business model, how you use your money smartly enough to build a smart, innovative, tech-driven business model. So when you look at how business models are being built here in the region, you'd find that majority of them are process innovation rather than product innovation. So let's say we have a four-step process in order to get something done, then we are using technology in order to get it 3 and 2. And I mean, using technology as an enabler to change the way how even we manage the process is really important. And I want a good example, and again, it's another panel to discuss this, is the difference between asset-heavy business models and asset-light business model, and how maybe the same result at the very end of the day for the user, but how operations being structured made a dramatic changes and dramatic focal and corner points for each and every business model and how they're going to operate in the market and be self-sustaining. I think the ones that are more asset-light, more on using tech generally heavily in order to change the way that we are doing things, are the ones that is going to stay for long. The ones that are just burning a lot of money and having a lot of operations might have a kind of limited chance, I would say.
Hi guys, so my name is Dolly Annie. I'm one of the co-founders for Bow app. It's in LA, California, and I just have 2 different questions. What's like the one thing that you would like opt out of the investment, like totally opt out, like you'd be like, no, that's not the one thing that I can do. The second thing, if you got $100K and you're only 25, would you go through the Bitcoin and like you would separate it into like, you know, the Litecoin and like the Dogecoin and like etc., or you would just go straight ahead to like to the real estate? So like you would lease one and then you would like you know, change it up to like another lease, like, you know, to sublease it. So like what's the best way to actually get a passive income if you're actually 25 and you're still starting up 2 different startups? So it's 2 different questions. Sorry guys, thank you.
So for the first question, I might answer very quickly, and maybe I'll upset you. So anything for us, for example, when it comes to plug and play North Africa or plug and play Egypt specifically, we would not touch crypto. Why? Because it's kind of haram in Egypt, for example. It's like it's not really like something that we can.
You'd be surprised how much people love haram.
I know. Tell me about it. That's yeah. So we do. I would stay away from the haram stuff, but that's just for Egypt. So I'm sure Plug and Play generally would love to go in the haram side of things.
Please go ahead. Taking the answer also for the cryptocurrency, like why you would like to look for a passive income while you are 25? That's one of the main questions that coming to my mind. That's the age we will be able to be active to get money. However, I'm a type of old-fashioned. I know that there are a lot of people who make millions of the cryptocurrency and the Bitcoin at the beginning. However, for me to invest in something, I need to see a bottom line and the due diligence and I cannot put my money for something that I cannot see or touch, and only having this limited resources to spend or deal with this kind of money. So for me, if you have to put me in a choice between real estate and Bitcoin, I will put it in real estate.
I still have an answer, but just go ahead.
Yeah, I'm going to leave that crypto for you. No, I honestly think that domain expertise is really important to know exactly where to put your money, where to invest. So literally go and invest. If you have 100K and you want to invest them, first of all, diversify is really important, but put your money where you actually understand what you're doing. So if you know crypto, if you know Bitcoin, Dogecoin, and what kind of underlying technologies they are kind of utilizing and what kind of benefits and outcome is there, and you know them well, then it might be an opportunity. If you feel like, no, I still need more time, then go learn and spend some time to be comfortable enough to go and invest there. Because I've seen a lot of people that have followed the wave of like just putting money into Bitcoin and just putting money into Ethereum without knowing. And Ripple, if anyone can remember Ripple, particularly in 2019 and what happened, where there was millions of people that put money into Ripple but not understanding exactly what they were doing, all ended up kind of still holding the Ripple, but at almost kind of exactly zero value. So yeah, sorry.
Lovely. No, it's
you have Ripple?
Perfect. I totally agree. So the first big lesson everybody does is losing. I mean, can I ask, have the three of you lost money on investments?
Of course I have. Investments or on the Bitcoin?
No, investments in general.
Investments, yes, for sure.
Investments. So there's a reality. So now with crypto, and I'll just use it as an asset class, you can have 4 asset classes. Buy a house, put it in crypto. You could buy stocks and shares. So if you bought Netflix, it's down 70% today. So Bitcoin has, in the past year, done a little better than Netflix and all the tech stocks. And the fourth one, though, is, and this is something that everybody ignores, and you're in California, follow somebody called Cody Sanchez, and she talks about very simple cash-generating businesses. Laundromat, car wash, and then she'll buy 2, 3, 5, and make economies of scale. So the same accountant serves 5 car washes, you're saving money and making more money. Very simple cash-generating businesses. And I just mentioned 4, divide it into 4. Don't go crazy and make it 12, you just can't keep up. But yes, in property you can do what is a REIT, R-E-I-T, which is investing, actually one of the startups here lets you invest stake here in the region. Lets you invest a little money into property, not all of your money. Where crypto comes in, there is something called dollar cost averaging, and this comes from stocks and shares. Don't put all your money when you feel. Feelings are the worst enemy of investment. You should not put feelings into it. Try with 10%, because you can lose that 10% totally. Divide it between 2 things. That's my biggest advice. And then the dollar cost averaging means if you have $10,000, put $1,000 for 10 months, and you'll have an average price. Because Bitcoin today is at 16,500. It could be at 12,000 in 2 months. But it could be. So don't feel. Just do it over time.
Sorry to interrupt, guys. Can we take another question? Because we're still on the first.
Just one last thing.
Sure.
You can also buy gold, and there's now a lot of but that's true. Like gold assets now, and there are lots of fintechs now pivoting to fractional ownership of gold, and we started to do this as well in Egypt. So I'm sure that even in India, we've had like so many like success stories of fractional gold ownership, and you can actually own fractional gold and wait for the gold prices because it's a global, really like good asset to own as well.
Yeah, question to Karima directly, actually. So how did you make it through, right? Like in tech, venture capital, it's a very, in the Middle East at least, a very male-dominated type of sector. How did you make it through, and how can you set an example for a lot of young women and girls out there to pioneer, to strive and thrive?
Thank you. I'm so humbled that you asked me this question. So I try to navigate, generally work with a lot of humor. So humor helps a lot. I hope you guys laugh sometimes about it. But I'm pretty gender blind. I'm someone that grew up not really looking into this, very exposed. Bordo, I traveled abroad and came back. And I think I legitimately gained a lot of the trust of my peers and my coworkers by humbling down my colleague here, Ahmed, sitting right behind you. I can tell you we're actually good friends, same age, technically, internally. We're really as a flat structure. I try to empower all my colleagues in the same way. And I cried a few times in front of them, so this makes it easier for them to say, "Oh, cute, it's okay." And then when I strike, and they kind of like see that you have both the human side, but also you can step up and be a leader in the space. So it's a lot of human emotional intelligence stuff.
All right, guys. Who else has a question here? I saw a hand. Before you raise your hand, there was someone else? No? I'll go there and I'll come back to you.
Thank you. Hi, everyone. My name is Audrey Nakar. I'm the co-founder of Ustaz. I want an honest answer. I know there is a big hype around fintech, health tech. I want to hear more about edtech. I know some VCs are scared of edtech because they haven't seen yet a unicorn in the region. But there is a lot we can do. We heard yesterday 3 top CEOs talking about how much they want to actually invest in edtech, in education and change it. We need to disrupt it. So what's your view on this and your honest one?
Sure. Can I take this one? So, are we afraid of edtech because there's no unicorns in the region? The answer is absolutely no. But I think, because I was there for the edtech wave when it took place here in the region, and one of the things that I've noticed, and actually that was the reason why we had to take our time until we did our first edtech deal, that I think just right after COVID, everyone was so bullish on one particular business model that this is going to be the one business model that's going to work, and we don't have enough data from the market. We don't have enough data points on how things are moving forward. We cannot predict the future. We can't predict actually how COVID would lead or would change the education structure and system overall. So it was not about only kind of, everyone was focusing on delivering the information to the student at home, but we thought that there is more to edtech than that. And everyone was so bullish with so minimal information on how edtech is going to be shaped and structured. So I would say sometimes we would need our time to observe the market to see exactly how things would function. And when we see this, it's not about your company performance. It's more about the user behavior. I want to understand more about like what kind of cohorts you have, what kind of activity rate they have, completion rates they have. Is it sticky enough or not sticky enough? Who is actually the user? Is it the student himself or herself, or it's the parent? Who's the decision maker, and so on and so on and so forth. So over the past 10 years, we have seen a lot of changes into the structure of how education is taking place actually in the region, where there's now more opportunities. We see a lot of, and given that Abdurrahman is here, a lot of students now going abroad from the region to get educated abroad and so on. So we started to see some sort of an innovation and changes in the structure of how education is taking place, and it applies the same as well on the edtech channel. So I think it's just a matter of time, observation, need to understand more about the data, need to understand more about the user behavior.
And it's also about how we understand edtech, because edtech is not always straightforward. You have educational content that is gamifying alternative education, and then you have another content that helps digitize the existing curriculums, which is also harder to understand because curriculums are very state specific, sometimes regional specific. And you have another content that is more on the neo education school like curriculum, outside curriculum of schooling. So it's also how edtech itself is fragmented within the sphere, which is hard for us to understand. So it's up to the startups to articulate the vision and where you actually identify within the space.
Yeah.
I want to relate media. It's incredibly important. I think the education systems and ministries have not caught up with what's happening in reality. Learning on TikTok is one of the massively globally growing things, as well as YouTube. If you've heard of Khan Academy, so Khan Academy was teaching his nephew, and he posted them on YouTube. And then Bill Gates mentioned that his sons learn on that YouTube channel, and now Khan Academy is a global thing. And there's a guy out of India, couldn't make it into IIT. He started teaching using a mobile phone camera. He's got a unicorn. He's got $1 billion value business. The idea being, education fundamentally, now people go for the easiest way to get their education. And there's a startup gentleman sitting down there, and he's into his startup is a tech one, and his programmers went to university, and he was just telling us at lunch that his programmers use 1% of what they use at university. Everything else they've learned themselves online, and they have a successful podcasting company. So my point is, they're going online, ignoring traditional education, but there is hope, I think, for people who have the money to think, how can we aggregate this? How can we make it easier to find, and all of that?
Yeah,
we're going to take one more question, guys, if it's okay here, please.
Yeah, can I add one?
Sure,
one more
sure,
thing, please?
absolutely.
Thank you. So Karima is a good friend, and usually we don't agree a lot, but I have to agree with you on this one, Karima. So, just adding to that, I mean, when I was speaking mainly about K-12, but there's more to edtech, as Karima was saying and explaining. And when you look at upskilling opportunities or upskilling business model, basically, where you go and target corporates to upskill their employees and fill this kind of gap. And the problem here was much more clear. I think K-12 students staying at home, that was a problem that happened at what point, but we still don't know exactly what was happening and where it's heading. But when you look at the job skills needed in the market and the job skills available in the market, there was a huge clear gap that was before COVID, is going to exist during COVID, and will continue after COVID. So it was a clear case for us to see that actually upskilling platform, without mentioning name, like a lot of them in the region, is really important and is actually well needed in the region over the coming period. So again, when we speak about edtech, it's not the full edtech, and really we go deep into details by vertical and sub-vertical to say what we see, where we're going to invest, and that's when we say sector agnostic. That's exactly what we have to go through.
Amazing, thank you. We really have to bring this to a close, but I want to thank them because they delivered on what I promised to you today, and I said it was going to be a good panel, and I hope you thought it was. So thank you very much, everybody, for joining us. Thank you to Forbes for hosting, and I'm sure we'll see you at the next one. Fantastic, thanks so much.